When a new conflict breaks out halfway across the globe, it feels, well, pretty distant, right? But what if I told you that its shockwaves could ripple all the way to the foundation of a new house being built right in your neighborhood? It sounds kind of crazy, but that's the surprising connection we're going to break down right now. Let's trace how this all connects. I know, it seems totally disconnected, but the reality is the US home building industry, an industry that absolutely craves stability, is now trying to navigate this storm of new unpredictable problems. So what we're going to do is follow three distinct ripple effects. We'll start with global finance, then move to the physical materials, and finally get into the psychology of the person actually buying the home. And to kind of frame our thinking here, let's keep this quote from John Templeton in mind. See, this isn't about pretending to have all the answers. It's about figuring out the right questions to ask when things are this uncertain. Okay, so let's set the stage. For home builders, this year was supposed to be the beginning of a recovery. They had a playbook. They knew what challenges to expect. But this new conflict? It's basically thrown that playbook right out the window. Suddenly, there's this whole new layer of risk that touches everything from how much it costs to borrow money to how confident buyers feel. All right, here's the core idea we really need to get our heads around. Most of us think of housing as something super local, right? It's all about the land, the permits, what buyers in the area want. But the operating system, the engine that makes it all go, that's deeply, deeply global. It's running on global credit markets, global energy prices, and this constant flow of materials from all over the planet. And right now, that global system is under some serious stress. So let's start by tracing that first and probably most immediate impact. What happens to mortgage rates? We're literally going to follow the chain reaction all the way from a trouble spot on the map right to the interest rate on your home loan. And believe it or not, that chain reaction often kicks off right here in this narrow little ribbon of water, the Strait of Hormuz. You are looking at what is arguably the single most important choke point for the entire world's energy supply. Seriously, when things get tense in this waterway, the entire global economy just kind of holds its breath. And to put that importance into perspective, just think about this. About a fifth, 20%, of all the world's oil and petroleum liquids pass through this one little strait. So you can imagine when that flow is threatened, energy markets everywhere feel the shockwaves almost instantly. So, okay, here's how the dominoes fall. A disruption in the strait, boom, global energy prices spike. That makes everyone worried about inflation. The bond market, which absolutely hates inflation, reacts by selling off bonds, and that causes their yields to go up. And since mortgage rates are tied directly to those bond yields, well, mortgage rates get pushed higher too. That's the direct line from there to here. And as Robert Dietz, who's the chief economist for the National Association of Homebuilders, points out, it doesn't matter what politicians or commentators say. Ultimately, the bond market gets the final vote on all this. How it reacts to the risk of inflation is what sets borrowing costs for, well, pretty much everyone. Okay, but the financial impact? That's really only the beginning. The second big ripple slams into the physical supply chain. We're not just talking about interest rates anymore. We're talking about the actual nuts, bolts, pipes, and resins. All the stuff you need to build a house. And we've seen this play out before, haven't we? The pandemic really pulled back the curtain on just how fragile this whole system is. I mean, look at this. The average time it took to build a single-family home jumped from around 8 months to almost 10 months at the peak of all those disruptions. That is a huge blow to efficiency. And it's not just global pandemics that can do this. Even a regional shock, like that wild deep freeze in Texas back in 2021, can have massive national consequences. That one weather event basically crippled the petrochemical industry on the Gulf Coast. We're talking about the factories that make all the essential plastics, resins, and adhesives, and it created shortages of building materials all across the country. So why is that one industry so darn important? Well, just take a look at what actually goes into a modern home. An average new build has over 6,000 pounds of plastic resins. That's your vinyl siding, your flooring, your insulation, pipes, all the coatings and adhesives, and every single bit of it comes from the very same energy feedstocks that get all messed up by global conflict. And a lot of these dependencies are kind of hidden in plain sight. It's the stuff that's made in a factory, like your appliances, your HVAC system, that are the most vulnerable. A delay in one tiny component from overseas can bring an entire construction site to a grinding halt. And here's the crazy part. A tiny 10% shortfall of one little part, let's say a single microchip for an oven, can lead to a 100% failure to deliver the finished house on time. Okay, so that brings us to the third ripple, and this one is maybe the most human of all, buyer confidence. Because look, even if you can get a loan, and even if you can actually build the house, you still need somebody who's willing and able to buy it. And that takes a certain sense of stability and confidence in the future. And the thing is, consumers were already on some pretty shaky ground even before this latest conflict popped up. The Consumer Sentiment Index was hanging out at a really low 56.6, which basically tells you people were already feeling pretty bruised and cautious. They were not exactly feeling great about the economy. And this pessimism, it wasn't just on the buyer side. The builders were feeling it too. The NAHB's market index dropped all the way down to 36 in February. That is a crystal clear sign of distress over high costs and major affordability problems. So what you end up with is nervous buyers and nervous builders, and that is a really tough combination. So you might be asking yourself, why does watching the news about a war thousands of miles away make someone hesitate to buy a house here? It's a totally fair question. It feels like those two things should be in completely separate worlds, right? But here's the psychological connection. All that news coverage, it shifts a family's focus. Suddenly, the conversations around the dinner table are about job security, the price of gas, and long-term financial stability. It triggers this mindset where you want to avoid risk at all costs. And making the single biggest purchase of your life, well, that suddenly doesn't feel very safe anymore. And so a lot of potential buyers just decide, you know what? I'm going to wait this one out on the sidelines. So when you look at these three big waves of impact, rates, supply chains, and confidence, it's clear the industry can't just cross its fingers and hope for the best. The new game plan, the new imperative, has to be about hardening operations and building a foundation of resilience. And this quote from an analysis by Ken Pinto really gets to the heart of the problem on the ground. He points out that the real pain from past disruptions wasn't just that things cost more, it was the chaos. It was not being able to schedule your workers or line up your construction tasks because you had no idea if the materials would actually show up on time. It absolutely destroyed efficiency. So what does a playbook for resilience actually look like in practice? Well, for starters, it means getting smarter about supply chains, like holding extra stock of those really critical items, and pre-approving substitute materials so you're not scrambling when a shortage hits. It also means a whole new focus on operations, like obsessively tracking your construction times so you can catch delays the second they happen. And finally, it requires a new mindset about finance and tech. You have to assume rates are going to be volatile, not stable. And you've got to beef up your cybersecurity because that's becoming another front line in these global conflicts. When you boil it all down, the ultimate goal of all these strategies is pretty simple. You have to protect what's called construction to close velocity. That's the speed from breaking ground to closing the sale. Because that's what preserves your cash, it's what keeps costs from spiraling out of control, and maybe most importantly, it's what maintains the trust of that customer who's anxiously waiting for their new home. And all of this brings us to a final, really critical question. For decades, the bedrock of the home building industry was predictability. But in a world where these global shocks seem to be the new normal, maybe the most important foundation isn't made of concrete or steel anymore. Maybe it's resilience. Maybe that ability to bend without breaking is the real measure of success for building the homes of the future.